everyone. In today's video, we're going to discuss something interesting. That is, we're going to see how footprint charts can help you understand even price action a little better. And once you have been using footprint for a considerable amount of time, you will start seeing the candlesticks that you see in price action a little differently. You will start understanding the behavior of the buyers and sellers that are stepping in at important levels. You'll be able to see the zones where, you can expect some sort of interaction between the buyers and the sellers. For example, if you've reached a resistance and you can see something like this, where you can see some sort of sellers that are stepping in and take a trade, and position yourselves accordingly. So this is a footprint chart. What we're going to do today is not discuss so much about the footprint, but how price action, aka normal candlesticks, after you've been using this, make a lot more sense. Okay, so this is what has happened on the latest trading session that has just transpired, that is on the Friday 23rd of June. So what we're going to do today is just shrink it, and one by one we'll see how we can make sense of the candlesticks, plain candlesticks that we see on the chart when we are just looking at a chart without any footprint on it. Now what this does is, when you're looking at a footprint on a daily time frame or even a 4-hourly time frame and more, it will give you so much confidence and the ability to read within candlesticks because of what you have been noticing on the footprint and the sellers and the buyers stepping in within a candle. So let's start with this particular day. Now I'm not going to use volume profile and market profile. Of course, they are beautiful tools and you can use all the concepts similarly over here. And what I'm trying to bring out in this video is price action, or the basic candlesticks that you see here, can make a lot more sense because of you using the other tools. Now, for example, let's start with this trading day. Now, the first things, there's some things we keep in mind whenever we're looking at charts. So I'll just get my marker on. Now, what we need to see, or we will notice generally, if you look at this chart on with this, what happened on Thursday, you can straight away see this is an impulse move that happened off the low. So obviously someone was here who tried to step in, and there's someone who's right here. This is quite common and basic. So what we need to mark is an area like this. Okay, I will just mark it down for you, and you see this zone. Now why do I say that is because someone has literally, after all this, you can see a lot of volumes that were going just before this candle. So there are two things when I'm looking at these candlesticks. I know that in footprint there's someone who's tried to come in here. That is, some sort of absorption would have taken place at this level, and the other place where I can see some sort of absorption is this one, the absolute low. And after that, the market goes up. So I have two places in my mind straight away. One is this one where I see some sort of buyers that have stepped in, and the other one is this one where they've completely absorbed and started aggressively buying, causing the market to move up. So what do? I simply mark these places up, and I keep them in reference for the next time. Now this is not a line, it is a zone, because as you see on footprint also, it takes a little time to absorb and the buyers to come into play. They absorb all the sellers that have come in, or the late sellers that have come in, they absorb and then they go aggressive. Now as we just discussed, there were two places where I would have noticed the buyer step in. One is the one just above this zone, that is this one, and the other one is this one. So the other zone that we have here is a little above it, so we will mark this zone as well, and we'll keep a different color. Why I'm doing it, I'll just try to explain it to you. You don't need to mark everything down, but when you're beginning and you are trying to understand, sorry, this is not the one, so let us mark this zone as well. Okay, and we'll make it a little grayer. So you don't have to mark every zone, but once you understand these concepts and you start seeing them on a daily basis, you will really it'll start making a lot more sense. So as we discussed, there is one set of buyers over here that have come here, and the second set of buyers that have come here and actually caused the price to move. Now when this thing moves down, what we're going to expect is, you can go and backtest and see this happening on a daily basis, is there's going to be a small set of reaction on this level when the price moves down. Of course, it has not happened here, it has happened closer to the other zone. But what I have noticed is it comes here, it causes a little bit of pop-up up above. What it is doing is it is enticing retailers to think that this is a support zone and it is going to break up towards the upside, and it doesn't. It takes down, goes back again, flushes down, takes another liquidity sweep, and takes down out the stops who have entered early. Well, they are right, but they're taken out, and then the market moves in the other direction. So over here something like this has not happened. It did happen at the end of the day, and this zone comes in handy. So never think that these zones are not handy. They do come in handy to if you're not trying to plan a position to take a position here. Of course not, because they're going to sweep, but you have it in your mind that they are going to come and test this area. So when you're planning to take a trade, so you generally want a sweep of this area done, and then you take the position. So on this occasion what they do is they do take it down. They don't test the other one from which we saw good bounce. They take everybody out and they go on the in the other direction. Now when you see I'll delete all these rectangles and move ahead, and I want to show you something else as well. So when you see bars like this, now there's a red and the other one just takes out. Now the zone, the way to draw a zone on this bar is like this. This is going to now be your reference point, because the latest activity that happened here is that the sellers come in and they're absorbed, and the buyers immediately step in and have not allowed the price to move down. Of course it is very late in the day, but we keep this as reference. So this entire zone is our reference point. Now the next day when the market starts, as soon as you see a rejection, so now you can make out of what has happened. Even if you're not into it in the first 5 minutes, you can immediately see that someone was actually these sellers have stepped in, and the next day they're not trying not letting the market go above this zone, and it is immediately moved down. Now whilst this was happening, we just make it go to a 3-minute time frame so that we can draw our zones even better. We'll not switch on the footprint as of now. And when we were going down, just what we discussed, after we discuss this footprint, we'll go into the footprint charts and see how close we were when we were deciphering all this. Now when this big candles move, what you have to do is when you're looking at this price action, you have to see these moves that have really been caused by at particular zones. These big candles, one, two or three of them really start helping you in understanding and knowing where the selling aggression has come from. So after we see this candle, we certainly know that there would have been aggressive sellers within this candle, and they would have caused imbalances within this candle. Now the thing that we can straight away see is there was an attempt by some sort of buyers like we saw over there in this zone. So what we can do is we can just shift this down, okay, and we know that this is the zone that they're going to pop in at least once. So once this goes down, it moves up, it takes sort of a resistance. Now this pop up right to this point and not causing the low to break is now you have to keep in mind this is certainly going to be broken, as we spoke over there. What I mean by that is if the market is going to be in a rotation mode, like you see in a market profile, a B profile, that is this bar is not going to be broken, and it's like it stays in the day, and we are going to have a day like this throughout the day. How we can trade this is the next time when we come here, now after we've seen this test and go down and it's not taken down the low, what we can expect is these stops that are placed here will be taken out once in the day, and there will be an attempt to go down again. Okay, so you can take something like what has happened here. Okay, now these are not valid points, valid zones which can or which would be defended. That is why I said they would be broken. Something like this, which caused a really high up move, was defended and there was a good trade you could get. Something like this is you have to be wary, and you have to take your profits, and your stop loss should be very less, because you know it is not a valid zone which would be defended. This of course is a valid zone. That is, if the market would have gone here, you could have expected a good pullback of 40-50 points, and accordingly you could have placed your targets. but this part over here you can expect only a handful of points, that is 20-30, because you have a VWAP which of course can offer some side kind of support. So moving ahead now, another place where we saw a good up move is this zone which we'll just mark, and we saw the buyer step in at 2 points whilst this was going down. This is one point like we just discussed over here, and we mark this zone. This is the zone where they will use in a mean reversion market to take out stops like this and move in the other direction. So you have to be very wary when you take a trade over here. So when you see this test and this break, it will generally more often than not break, take the stops and move in the opposite direction, which is very often in a mean reversion market, and mean reversion markets are generally happening 7 out of 10 days. So such type of price action is something which you will see more often than not happening across the day. Now the other thing that we can draw here is the zone over here. Okay, so this is a zone which is caused which is taken the market to the other extreme. Okay, albeit there was a small pullback, and this pullback was nothing where we saw a little buyers and we saw another set of stops being taken out, of the liquidity being swept over here, and then the market moves in the other direction. Similarly over here, if you see, this is a move which has caused sellers to step in. Now what you can do is you can mark these zones. This is the one I was talking about. So there was an attempt, a failed attempt, and the market goes and this high is not taken out. So these are the zones for the coming days. So for example, if the market opens gap up, what you will see happening is, if it opens somewhere here, it will take a bounce off here and move away. Now the same thing can be seen on market profile and volume profile also, but what I'm trying to get out here is you can see the same thing happening on a pure candlestick chart as well. Now what we discussed, you can see happening throughout the day. They come here, if they have to take it up, they again, if you see, they have taken these stops out. Whoever would have put the stops here, they're taken out, and then the market moves. Of course, this was the closing session, and the market moves back and has stayed within this region. Now what we are expecting for Monday is, if the market opens somewhere here, okay, now this zone is also important, is in the opening sessions, if the market opens and goes straight away, so what you can expect is again some sort of this price action during the first few hours, and then maybe a move to the upside or to the downside. On the other hand, if the market opens and does something like this, it can go down and be a trending market to the downside, or the same thing repeats itself. And how do you know that? By the amount of impulse or the move that is caused in the opposite direction. So for example, if on Monday you see something similar happening, and you see a good pullback, something like this, you can expect it to be a day like this, or a little bit down and then stays over there. So you can use these references quite effectively for your day trading. And when you are approaching zones like this, you don't take a trade off immediately. You know there is going to be a liquidity sweep, and more often than not, what will happen is, if it has to go down, for example, if it had to go down when this thing happened and it had to go down, this move is generally not going to happen. When it comes out here, it will go up a little bit only, and it will pop down and take out everybody, and it will keep going down. It will not slow down here. It will be very fierce and very fast, so that all these stops along with aggressive sellers step in and they take the market down, and over there they'll start balancing again. Balancing is nothing but something like this, wherein the market is within a zone and remains in the zone until the next move or the next direction is decided. Okay, now what we're going to do is we're going to look at the footprint charts and understand what was happening within the candlesticks, and how what we have done here makes a lot of sense. Okay, so what we're going to do is make a two layout chart over here, and we're going to bring it down, and suddenly when you see these zones, okay, this zone which we marked where the sellers the buyer stepped in, and the first one where the sellers step in, so this is at about 9:18 or 21. So when we go over here, and look at the charts and see what was happening. So if you've seen my previous videos, you've seen a huge surge of max delta that has come in, and these zones are of really big significance to us. The market pops up, fails, and goes down, so it is quite close to what we have been drawing on the basic candlestick charts. Now over here, the two candles that we just spoke about, this candle is taken out and we draw this zone down, and it is something like this which has happened here. Okay, and you can see a lot of absorption that is taken place at these levels, these zones. So the more important zone that has come up, if you look at a footprint, is this one. Okay, so that is why if you see, we saw a good rejection or the bounce at 700 levels and not at the bottom, but we were quite close even in candlestick. So what I'm getting at is, it is not that you can't use a simple candlestick and understand what is going on within the candle, because you've been experiencing footprint and you have a general idea of what you can find within these candlesticks and how footprint can really help you understand all this. So this is the area that was of great significance. If we were looking at a footprint, this is the area we would have marked, and obviously it takes support of that. You can be so confident that this happens. Now this is another imbalance zone on the sell side, was taken on the upside, and when you're trading these zones, it is the first attempt that makes a lot of sense, and of course it goes on the other side, and once it retraces back, these are the zone it takes support of. Now the other one is at the top at this level which we marked. It is at 1245. Let's go at the 1245 and see what happened. So you see, this is the impulse candle which got in which triggered a lot of stops. This is the one, and this is like we've been speaking about. What our strategy says is, if we break this area, we can generally expect the market to reverse in the opposite direction, and this 1606 is where we see a lot of buyers being absorbed. So this is the place where a lot of buyers are absorbed. This is the place, this is the place. So as soon as this breaks and this one breaks, it's a trigger entry in accordance to the strategy we follow on footprint. But even on a plain candlestick, you can mark this zone, and when it goes down and this reattempt fails, is you can take an entry with a small stop loss. Of course, footprint will give you a lot finer entries, in the sense that your stops and your take profits will be exact, very near to the exact zones where the buyers and sellers stepped in. Now the last thing I'm going to do is, I'm going to shift to a daily time frame. Why I'm doing that is because this really helps on a daily time frame. It is not so practical to see a footprint chart on a daily time frame. Of course, volume profile is there, but what we're going to do is shift to a daily time frame. Okay, so of course the cluster charts are not supported there. Now what we're going to do is switch off the VWAP as well, like this, and we're going to delete the horizontal lines that we have plotted here. Okay, and now we'll see this chart. Okay, so in a daily chart, the same thing applies. So the impulse move that has started, one is this one. So we'll just keep marking the zones, and you can, when the next time the market comes here, so this is the zone which has caused some sort of a move up. So the next time when the market moves down, we can expect some sort of a reaction. In the recent past, where we have seen a good move happening is this one, and this candle being taken out by that the big bearish candle being taken out. So this is another zone that you can have in mind. Whenever this comes, it's going to be of really good of help. And if you've seen the candlesticks that we spoke about, so in the larger context, this was the major move that was caused, okay, from this big impulse candle, and this is the other one. So when the market comes again over here next time, what are we going to expect? We're not going to expect a bounce off this place. What we can expect is a little bit of liquidity sweep that takes place. It goes a little bit down and goes back on the in the other direction, or it goes up to this point and moves resumes the uptrend that we are in. Even if it doesn't resume the uptrend, what can happen is it will go till here, this point, and then take a down move. So these zones are really helpful in even taking swing trades and understanding what is actually happening behind the bars. Okay, and lastly, on the upside, if we have to break, is this zone that we can mark over here. This is the zone where we've seen some significance from the sellers. It moves down now. Again, the same concept will apply. it has gone down. Eventually, if it comes up, it can take a small pullback and go up and resume its uptrend. So hopefully this video was of some help to you guys in understanding even basic candlestick charts. Until next time, bye bye.